Alright, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today, as promised, we are going to be going over my August trade review. We're going to go over the trades that I took. If you have not watched my last video, August was my first losing month in about a year of time. I've had good profitable months since about September of 2024, leading into about July of 2025, and I mainly wanted to break down in that last video the probability and understanding that losing months are completely normal and can happen. As a trader, we have to understand the inconsistency in returns. If you make 120% per year, it does not mean that every single month will be a 10% return. You could have 20% months, you could have negative 10% months. It's that accumulation that creates a long-term edge as a trader. It's why an equity curve is so important to visually see. We have this consistent growth overall, but of course there is those periods of lower dips in the equity curve. That is how trading is meant to be. And unfortunately, this video doesn't get to be as dramatic because, as you guys can see, I took a winner on EuroCAD to start September. So now officially all of these losses are completely wiped out. Using the fixed 3 risk to reward we use, I'm actually up 2% if you count August into early September now. But we can forget about that and cry together and go over my trades in August and see the returns that I had as well as kind of how they played out. Lots of break-even trades this month. One other thing that I forgot to mention, my repetitions are clearly very low in August. I went on 2 trips. I mentioned it in my last video, but I went away early August with my girlfriend on a trip for about this 2-week period. You could see there's no trades here. And then of course, towards the end of August, I did go and spend a few days enjoying the weather on the boat. So of course, the end of August had some lack in repetitions as well. And as we know from my previous videos, the more repetitions you can make, typically the more risk of return you are going to make overall using a consistent strategy like our own. If you want to follow along, feel free to download the strategy in the description below. You can look at my trades and compare them to ones that you took in August. And let's get started right away here. So the first trade we are going to be going over is CAD JPY. Very simple, very basic here. We have a break of structure to the upside, a bit of a consolidation here. I typically don't like to take consolidation areas, but I could see a clear and aggressive break of structure, and the trend was fairly bullish overall. We see a clear and great sweep on liquidity. We come below this low, grabbing that liquidity, breaking structure very aggressively to the upside. I simply take my fib from the low to the high of the range. I slap on that entry at the 75%, and what do you know, I get ripped through. Could I complain that this is what I get for trading consolidation? Maybe. Do I care about the loss? Not at all. We go on to the next, and once again, kind of similar. We have a bullish trend overall, prices working with higher highs and higher lows. We see a sweep on liquidity, a super strong and aggressive break of structure here with this large candle, huge fair value gap left behind. I simply enter the trade at the 75% as always, and price comes and works its way through my stop loss again. 2 losses in a row. And the third trade we will go over is going to be AUD JPY. Now, this one, pretty basically, once again, we have a bullish trend overall. I'm looking for higher highs to be made. There was a short position here after structure broke lower, so I did miss this short position here just by a little bit on that 75%. I don't go and change my strategy or change my rules so that I would have gotten in here. I don't say, oh, I could have entered on the fair value gap or I could have entered on this supply zone and I would have been profitable. That is not how trading works, guys. Think in that probabilistic mindset and you will find your success and your edge in the markets. We see a sweep on liquidity, a break of structure to the upside, small fair value gap here closer to entry. We have another one up towards the high here. Doesn't necessarily matter for me the size of the fair value gap or where it is in the range. Price works its way back down and in. We tap into it, super aggressively move bullish right through my risk-free level, and then price reverses and I hit a break even here for no return or no loss. On my actual broker, I have a trade assistant, so it does technically stop my trades a little bit before 0.00% return. So yes, I kind of do make a little bit of profit here. And the next trade, once again, super simple, super consistent and basic. I'm going to sound like a broken record this video, but we have a sweep on liquidity. We have this consolidation area. Price runs through it, grabbing that liquidity and then breaks structure higher very, very quickly. Once again, we got to see, is there a fair value gap in the range? Yes, there is. It's right here. So I mark my low, I mark my high with the highlighter so you guys can kind of visually see the range I'm trading a little bit better. Slap on my fib, and once again, it runs through my stop loss. Now, I technically did not get taken out here on my live account. Price worked its way back up to about break even. And then this candle is the one that took me out on my live account. That's just due to spread within this trading pair, especially a pair like NZD CAD has a bit higher spread than others. And the next one we will look at is NZD USD. We have a sweep on liquidity here, a break of structure to the upside. I always like to mark out my range so you guys can visually get an understanding of where I am trading and what I'm seeing. slap on that entry at the fib, and what do you know? Once again, we take another loss. Now, of course, at this point, like all of you guys, I was crying, I was punching my computer. I started looking up SMC videos on YouTube, but of course I snapped out of it because I'm in the simple markets community and I understand that this is part of trading and part of probabilities and an edge. So I went right to the next trade here and I had a sweep on liquidity, a break of structure, a fair value gap. Once again, we started seeing some profitability here. My P&L was going up on my broker, and then we ran back to my break even for a 0% gain. Did I convince myself that this was going to be that winning trade to end the losing streak? Maybe a little bit. But of course, as you could see, we broke even here and made no return on this one. And the next trade we will take a look at is EuroCAD. EuroCAD had a winning trade last month. This nice short position here where price started to reverse. We broke structure to the downside, fair value gap, sweep on liquidity, the usual that we always see. Tapped in, made a good 3 RR. Did that mean that this one was going to happen this month? Well, technically speaking, yes, we did end up hitting take profit on this trade. However, you guys know we have a risk-free rule, and price tapped me in. It ran to my risk-free and then tapped entry once again. So I made 0% return on this trade. Does that mean I go ahead and change my rules? Of course not, because if we take a look at my RR without the break-even rule versus with the break-even rule this year, we could see I would be 10 RR and 20% lower on my net returns if I remove that rule from my trading strategy. I'm perfectly okay with it, despite the losing streak, despite the losses from before. I understand it is part of the edge. Keep your head down, keep pushing, keep trading. And here we go, another break-even trade here. Now, at this point, USD JPY, we have a sweep on liquidity, a break of structure. In my opinion, not the cleanest or strongest break of structure. I took the trade anyways, and we tapped in, we run to risk-free, and then we break even here for another 0% return. I am sounding like a broken record in this video at this point. I don't have to keep going with each individual trade if you guys don't want. But once again, we are just looking at a break of structure to the downside, a fair value gap, And I get this question sometimes. When I see such a clear bearish trend, I don't always need the cleanest, most prominent sweep on liquidity. Perfectly fine with taking a range like this. If you find yourself diving into too many minute intricacies in your trading plan, you may be getting overcomplicated with it. I would recommend taking a step back, trusting that edge a little bit more, maybe even backtesting more so you can see that longer term edge play out without having to wait an entire real life month for it. We tap in, we go to risk free and break even on this one as well. And to touch back on what I just said, if you are only live trading this strategy and don't have backtested data, when a month like August comes around, you are going to assume you are doing something wrong. You're going to assume it doesn't work. You need to have that long-term data so that you can concrete and confidently say you have a long-term edge trading the plan the way that you do. I'm sorry for those of you out there that are too lazy or cannot discipline themselves to backtest. Trading or any industry is not for you. If you cannot discipline yourself to do the hard work when you need to, you will not find success no matter the niche or the strategy. It's just the hard truth, and I'm here to give you guys the hard truth. So the next trade we are going to look at is a winning trade on AUD JPY. Kept my head down, kept trading, had this really fat range here. We had a sweep on liquidity, break of structure to the downside, and a pretty clear bearish trend. Huge fair value gaps here to show me that I wanted to trade this range. Typically one way that I decide if my trade is being extended too long, if this 50% line reaches beyond the break of structure, I'll sometimes cancel it because then I assume prices ran too far. We were still within it, so I held on to the trade. We tapped in, almost moved towards my break even here, did not reach it, came back up into some drawdown, and then inevitably ran that 3 RR for my 6% win this month. This already clears out 3 of the losses we looked at. There was only 1 more that we looked at, and the remainder of the month was break-even trades for me. Pretty low and slow volume in August overall, which is what leads to a lot of break-even positions when price is sideways. I would so much rather take break-evens than I would losses. This one would be a loss. This one would be a loss, and this one here inevitably became a loss. That break-even rule, although it may be annoying for some people, it is saving me tons of capital on my account, preserving my capital, and dragging my overall win rate much, much higher. And as a bonus, I guess, if you guys would like, we can go over my winning trade in September. We can actually pull it up on my chart here. So this is the EuroCAD trade we went over already, where we had a break, a fair value gap, and then we tapped in risk-free and then broke even here before price ran my take profit, being my only trade this month actually that was taken out at break even with a profitable return. The rest of them were all losses. Then as we continue on, price was starting to work in these bearish ranges. We had a break of structure down. We're seeing price trend lower. I simply just saw the fair value gap, the sweep on liquidity, and the break of structure once again, and as always, slapped on my entry. It came very aggressively towards my entry level. I didn't get scared. I didn't close out my trade in break even because I was nervous. I let it do its thing and of course a 3 RR return, making me 6% and inevitably sweeping all of the losses that we took in the losing month of August. And my equity curve is right about at all-time highs again. I will keep you guys updated on September. You guys know I keep it as transparent as I can with you. I hope you guys appreciate the transparency and me going over my trades. Hope you guys learned something today. I hope you guys built a little bit on that mental fortitude and trading psychology for the future. Thank you guys for watching. Like the video if you gained some value, and I will see you guys next Monday.